What is going on, everybody, and welcome to another technical analysis. And what I like to do in these videos is provide you guys some entries and exits for stocks that I am looking at throughout the week. If that sounds like something you're interested in, consider subscribing, as I do also provide a weekly update that I provide upcoming earnings, upcoming events to get you prepared for the week ahead. I also do daily pulses on the market at Hammy137 on X as well, so you can check me out there as well. But with that being said, let's dive straight into what we got this week. Something I stated coming into this week is it looked like it was almost a dead cat bounce. So we were retesting for underneath, and now we are starting to sell back off, and we're breaking some very critical levels that we can expect some pretty big bloodshed. Now it all depends. Now there's some stocks that have already sold off, especially when you're talking about the Mag 7. Tesla being one of them is already sold off about 56%, which is wild already. So essentially the price has already been essentially cut in half. So it's more of a interesting buy than per se Amazon or Apple, some of these other stocks that have essentially been only taking about 20-30% haircuts. They can sell off a little bit more. Tesla has had some more news just because of Elon, so it's been in the headlines more. So it has been selling off a lot quicker because of that. But with that being said, let's go ahead and dive right into the index. So something I've stated essentially since February 20th, we've essentially been on decline. We've broken out of that up only mode. We've had a very long streak, about a year and a half, when we put rates on pause, and we've finally broken out of that upward trend, and now we're kind to sell off pretty heavy. How far down do we go is really the question. Ultimately, when you do break a trend, you'd like to see it try to retest. We got about a half of a bounce, which this again is 57.48 is a very critical level. And the fact that we've retested that, if we can't hold above that by essentially tomorrow, which I don't believe is going to recover by tomorrow, it could. But again, you have potentially a lot of tariffs being announced on Wednesday. So that could lead to some more selling, or it could essentially reverse the market and we could start pushing up. There's been a lot of rumors and speculation about that potentially happening. But again, we have to wait till Wednesday to see how that plays out. And then we also have the unemployment report on Friday, which could lead to potentially more selling. So the next big level we're kind of really watching here, if we can't hold this current level that we bounced off of, this 55.93, if we do break this, see us falling down to 54.18. So pretty big jump down from that point. And then if you start getting on some of these higher time frames, this kind of really put us in an interesting spot here. So like I said, this is a trend that we've broken. Again, we retested this level, which was a very critical level here as well, this 58.56 this week. And then we rejected off hardcore. I think, again, you have pretty solid support here roughly at the 54.22. You break that, then your next level is sitting here at the 52.39. So depending on the series of events this week, if Wednesday is bad with the tariffs, we could get some positive news there. So I wouldn't lean too heavy on negative. I'm leaning more towards a positive. Again, Trump likes to kind of scare a lot of people just with the tariff talk. And again, we have to wait and see to really see what that means, what this Liberation Day is. But nonetheless, these are our critical levels that we're kind of watching now. I don't see us heading down here unless for some reason by Friday we have a really bad jobs report and things didn't end very well on Wednesday, which I'm not really anticipating, but more so a shocking unemployment report, which shouldn't be shocking because, again, we have over 2 million ghost jobs. So if our unemployment's over 5%, it's not surprising to me because I was already aware of these things. But again, it's surprising to the market because they control the narrative. And if you don't know what the narrative is and realize that there's been massive revisions going on, it's not going to influence the market until, again, this utopic view gets reflected in the reality of the situation. So with that being said, again, let's take a look at what's been selling off so far. Again, we've hit already 11%. We're already in correction territory, being 10% below that. So how much further can we fall? You look at some of these critical levels down here. It's about 14% if we hit that 52.52. We break that. We got another pretty big critical level here, the 49.75, which is only roughly about 20%. Then you got a pretty big dive down here to 45.82. That's 25%. Again, our last correction back in 2022 was roughly around 26%. Now that is when tech bottomed out. That's essentially when everything died that year, especially tech. Tech hit some really low numbers. I'm not expecting tech to go that low this time around. But with that also being said, is that I don't know how much more of a correction we're going to get, because that was a pretty big one. That was only 2 years ago here, or roughly about 2 years ago, because it was in the fall of 22. And then again, ever since then, battling with inflation finally cooled off, and then we were able to pause the rates, which essentially caused the market to start ripping again. So, which is, I believe, this mark here. And yep, that's 23. I couldn't even go further back than that, but nonetheless, so that's kind of what we're looking at there. Again, trying to take things in a larger scope and see where things are at. But as far as this week, again, I think we may see this level 54.35. We come really close to it, which technically the demand is there pretty good if it ripped back up to this. So I don't know if this is going to be our floor right now. There's really solid support here. Like I said, we have some pretty good support here, and then very solid support here at that 5K mark. So if we do move down, again, the market is pricing in 140 points this week, 141 points this week. So could get quite hairy. 141 points. This is what I talk about when they talk about pricing in the end of the world. I'm talking about 141 points. They're aiming that they're going to hit this 54 or 56 number here. So it can even drop 141 points, and you would just be burning cash if you were buying options this week. That's what I always talk about. They try to price in the end of the world, so you can't take advantage of the market. That's how they get around it. That's how they control the market from free falling 80%, right? Is they're just not going to allow you to make money off the market when the market's doing bad. So again, it's not as easy as it once was. The pandemic, with everybody jumping in, retail traders, and making tons of money off of options, 0-day options, has really changed the market and the way the market controls that situation now, so that they don't have to pay anybody out. Either they price in the end of the world, or they just don't allow you to execute your trades, which can be very detrimental. And then it's again just how they control the market. So again, we'll have to see. But again, given that we had about that 26% correction, I can see us correcting just because of this move up. I can see us correcting 75. So I can see maybe sitting at 46.29. But again, you're going to need a lot of fear. Maybe that's our bottom in this round. It would still make a higher low. Again, if you're talking about the overall market in general, this is essentially when we had high inflation, and then we paused. I believe was that was October of 22 is this spot right here, when we paused, or we were able to control inflation, which allowed us to start pushing back up. But then we turned over because things were looking bad, and then we paused, and that's essentially election time. We went straight up since that point. So again, we're going to have to at least correct this part of the move. The market is designed to go up, but you will see some bad times. And the big problem, again, is you don't want to expect that things are going to correct 80% and have a 1930s crash, right? You've had a major crash not that long ago. It takes a couple of years for these things to play out. Yeah, you can have a short correction, and then maybe we'll have another major crash. Again, you have to understand you are in one of the months that you have heavy sell-offs. And then April is supposed to be bullish. You're coming into some really important data sets on top of that. So we'll see. But again, we'll have to see. The market needs to recover. The rates need to come down, period. That's the one thing that is our linchpin of all things right now, is that rates need to come down, or things are going to start getting really bad. So if they hold off on doing rates, which Powell has already said and Trump has already been pushing for, cutting rates, because again, they got to essentially deal with the debt, and they can't deal with debt at these higher rates. So they need an event. When that event triggers, we'll see how much gas it's going to provide to the downside for SPX. And let's take a look at Bitcoin. Bitcoin's kind of the same situation here. Again, we've been we broke this level. This is a major level here at the 92. Now we broke. We've retested that. Now we got to see how much further we can drop. Here's kind of a free fall. If we break this level here at the 77, again, you've got some pretty solid support here, roughly around that 70 mark. And then you got another pretty solid point here at 62. Your 200 is sitting roughly here at the 52. Again, I think if you get Bitcoin down at any of these levels, it's going to sell back. It's going to be bought up really quick. And then I think that's going to kind of lead into our bullish run towards the back half of the year. I'm not really anticipating this thing dropping below the 50. I'm not saying it can't. I think it can go. If it does, it'll probably be very, very quick. Last night, a couple of days, and this thing I think is going to shoot right back up. So if you're going to try to take advantage of crypto during that time, I think you're going to need to, because it'll fall right into that window from the halving. You have to understand, from when the halving has occurred, you still have like 6 months after that, or I think it's like 8 months or something like that, is when you actually really see your true bull market for crypto. So yeah, again, you do have to understand, yeah, you ran 580% since the 16K mark, but now you haven't really had an alt season, and that's kind of what's about ready to get kicked off. I think you get a small pullback here. I've been talking about this for a while. I still believe there will be some sort of pullback. How deep will that go? Again, you just have to watch the levels and kind of see how things play out, especially with events. So, because if something happens, inflation always will affect tech, and Bitcoin's kind of associated with this tech in general. So now Tesla not looking so hot on the weekly, but nonetheless, this is kind of being a very big support level here. Again, we did break. We were holding really solid, pretty solid here at the 224. That might be the floor. We may be reversing here. Again, depends what happens this week, though. Tesla has FSD. They're already getting approval in different some states or some cities. So you need to keep that in mind. That may be that should be the next catalyst. And then we're talking about humanoids are getting really popular on a lot of different platforms. That narrative will continue to be out there till it becomes the norm, and then people will catch on, and that's when Tesla will kind of catch on. Yes, they might not have a Boston Dynamic robot, but you have to understand Boston's Dynamics robot is extremely expensive. You're talking, I think it's about a couple $1 billion to create a robot. That's not scalable. So Tesla, on the other hand, they're more efficient, and they can create a lot of these bots. And so it's really just having that one aha moment where things just really start taking off. And I think Tesla is going to lead that pack. There's not a lot of publicly traded companies either that have that availability. Now, Meta and Apple have been trying to get in that space, but they need an actual robot, and they've obviously been working on the brains of the humanoid, but again, they need to partner with somebody, which could be a big problem kind of moving forward. So we'll see. But so that's kind of what we got for Tesla. As you can see, technical wise, again, everything is really kind of just looking choppy. So I think we're going to continue to grind against here. We might get one more drop down here to the 220. Then maybe the breakout will happen. Again, I think it's very short-lived. Tesla's already corrected a lot already. So if we get the correction to the bottom so far, again, about 56%. So it's already been heavily corrected. It's not saying it can't sell off more. Again, just a couple of years ago, we saw how heavily they do sell off, but Tesla does recover very, very quickly and has a lot of things going for it. And again, understand that it's a tech company and not just a AV company, and that's the way Wall Street prices it, is an EV. Well, yes, Wall Street is slow, so you do need to keep that in mind. So, but right now, the 220 is a solid floor right now. Rxrx. The interesting thing about this, you have to understand, is now just as of on the weekend, we started recovering with Rxrx, but then Trump started talking about a bunch of vaccination taxes and stuff like that. Or not taxes, but tariffs. And so we started getting in the pharmaceutical industry, you started getting a lot of selling off just because of that. So that also is something they're going to be talking about here in the next couple of days. So you should see a big move. If it's positive, I'm expecting this thing to start running back up. Again, you have a lot of big businesses in here. So putting tons of money into this corporation, yeah, it burns money fast. But if, one of these trial drugs do very well, which they are getting that process is expedited. This is why this thing seems to be it's very risky, but already very potentially a huge reward for Rxrx moving forward. So, but expecting it to play this range, like I said, right now it's holding this $6 mark. It's floating around there. Again, we could even drop down here to that 491 mark is like the floor. But we'll have to see how the tariff stuff plays out this week. If it's positive, again, I'm expecting a big pop could occur this week. You have to understand that. If we get any positive news on the tariff stuff, the market's going to flip back up and start running. So you do want to keep that in mind. And then let's look at some of these other ones we've been talking about. HIMS is obviously selling off because of the pharmaceutical news as well. If that does get passed or something happens with that, you can expect this thing to correct even more. I think the 23 support will get blasted through us, even if that tariff stuff comes through. And then you also got this 1961 as well as another big level. But again, your current ceiling right now is kind of for the $43 mark right now. It's kind of the bigger ceiling that we're kind of watching there as well. ELF has been creating a very, very good base here, sitting roughly at this $63 mark. Again, tariffs have been taking huge hacks at this as well. But again, they're a good company that's doing very well. It's just economic environment. So when things get better, which will take one event for things to show that things are getting better, this thing is going to start really ripping. So the fact it's starting to consolidate here is a strong side. We consolidate a lot for here. Then we started pushing up and start talking about tariffs, and then that was it. And then we started selling off. So, but again, if you have a good solid earnings, which we have one coming up, if there is good earnings, a lot of these stocks I think are going to start running back up because of that. So AMD, again, a lot of talks about tariffs and uncertainty is going to scare everything in the market. But it does look like we are kind of breaking out here. If we're looking at this, we have a break and a retest potentially. The floor may be this 95, and then maybe this starts to really start ripping up. Again, inference is a huge thing that AMD has always been focused on. That may be the next step, the next key to the puzzle for AMD that allows them to get more share. I'm not saying that it's going to take it away from NVIDIA. NVIDIA will always do well. But I think AMD can start taking a larger portion of that market, which I think it could have a bigger move than NVIDIA in that sense, compared that NVIDIA has already ran so much to this point. Not to say that its growth is going to be stunted, but I still think it's very strong. So really looking at that level this week and then see if we can reclaim back up here to the 130. I'm not saying it can all happen this week, but given the news, I think you're going to have to deal with some very large swings in the market this week. I believe so. Meta, the charts here are very hard to do on the daily, just because of the fact that what you're looking at is it can get very choppy and you have these massive runs. But right now you're really looking at this floor here at the 578. I think this thing, obviously with everything going on, I think this thing can even still correct even more. We're going to take a look here at what we're at right now. We're already at 22%. I think this is the least sell-off out of the Mag 7. I think Meta's done extremely well even till this point. In my opinion, I think I would rather really start buying this thing roughly around the 470. If we start really selling off, that kind of correction, I think if market's really going to sell off, that's where your meat's going to come from. That's for about a 40% correction for Meta. But that's what I'm kind of looking at for Meta. But daily wise, right, like we want to be able to hold that, and then you want to be able to hold at least 533. But I think if, again, the whole sentiment of the market's going to be bad, it's definitely going to come off of Meta. So, and some of these other ones like Amazon as well. Amazon's at a critical level here, sitting at the 197. If that does break, I think your next big level here is the 171. Now, it's not saying it's going to do that in 1 week. Again, a lot of these are off the daily, so you have to keep that in mind. So it might take a couple of days for it to make it down to that level, but eventually it will make it down to that level. So that's what I'm kind of really watching out there. Celsius, again, doing very well. We talked about this. It's been consolidating essentially really nice between these kind of two levels here. You got two zones that are almost smashed together here between the 34 here and the 31 has been kind of holding that 26 level mark. But again, I think this one could do very well. And I do believe it can recover a lot back up to the 100 once the market starts turning. Again, you don't want to be left out of some of these just because of the way things are. I think you're going to get hit a point, and then the printers are going to turn on, and then these things are really going to rip. So that's kind of really what I'm watching there. XYZ or block. This one, again, has been consolidating very nicely for what seems like over a couple years. May not be exciting, but I do believe you can see some of these higher numbers moving forward, especially if the market starts to recover. So I'm saying a lot of the market just hasn't recovered since 2022. It's just the Mag 7. If you weren't in the Mag 7, you didn't have great returns, but I think all that stuff is going to start flipping here very shortly. And then this 56 is a solid floor. We have seen some spikes down to the 41, but I like the way SPX is, or XYZ is right now. So that will be one to definitely keep on your radar. Then you had BA. Again, with everything going on, this stock, I don't know how it holds the price levels that it does, but so again, you got a ceiling. You got a solid ceiling here at the 200, and then we've been kind of fluctuating with all these mini stops here at the 180, and then you got a pretty solid floor at the 165. Although we've seen some spikes down here to the 144, I think we'll see another revisit to potentially down to the 144. I'm really just anticipating BA to kind of just continue to trade sideways like a lot of these are until we kind of get past some of these major events. And then when the market starts running again, they will really start taking off. So when, again, a stock starts consolidating a lot like that, you need to keep that in mind. It's ready to go. It's found its floor. As soon as the stock gets good news, it's really going to start ripping. So you want to be in it then and not wait until after the fact. So then JP Morgan, obviously you've had that massive sell-off. This is only corrected, I think, barely 10% so far, or 20%. It has recovered a good chunk of that already. So we're kind of really watching. We've filled this gap so far, which is a positive. But again, higher low here, which is not a good sign. So we may be seeing a new low down here to the 115 or 215. I think is a very strong possibility. Again, the fact they're pricing in, I think 8 or 9 points this week is a lot, because typically it only moves like 4 or 5 points in a week at most. So you're almost doubling that move because of all the potential events that are going on during this week. So we have that. And then what else do we got? I think that may be everything right now. Trading desk is one that I've been really thinking about too. TTD. It's had a massive gap down. I'm kind of really watching to see if it can get to this $44 level. I think when it hits 44, it'd be a good time to buy. You have some support here roughly around the 28 as well. But again, obviously this company's not going to do well until the market starts to turn and people start advertising again. And right now people just don't have liquidity. So there's nowhere until we start getting money injected to get some quantitative easing, and we start getting rate cuts. I'm not anticipating this to do very well till that point. So, and I think we are very close to that happening. Again, I don't think nobody has liquidity at this point. I think you've pretty much hit bottom at this point. You continue to try to sell fear the best that you can. But again, this is when the government is supposed to step in and provide quantitative easing and provide some rate cuts. So I think we're very close to that. And this is, I think, can hit this level, this $40 level very shortly. And then we should get back to some fantastic earnings and the market go up again. But again, you need this last event, this last leg to play out. And then whatever additional fears are going to roll out needs to roll out now. If that causes us to correct another 20-30%, I think at this point, we really have to see, because it's going to be associated with the event and what takes place during that event and how much fear people have at this point. So with all that being said, if you have made it this far, go ahead and drop a like, and I will see you guys on the next one.